Hello and welcome to today's webinar. I'm Dwayne Paschall and we're going to be talking today about uncovering secrets with machine learning and data science. First, we'll talk a little bit about what is machine learning. Some of you may have heard the term before, but maybe not quite sure how it applies to trading. And then the rest of the time, we're going to talk about four machine learning and data science tools that we've developed for traders here at autotradesignal.com. The first one that we'll talk about is noise reduction, and then we'll talk about predicting tomorrow's price. Finally, one of the more informative and exciting things that we'll talk about is looking at indicator importance. In other words, not every indicator is equally as powerful in predicting the price changes and price movements of individual stocks and commodities. That's what we're going to take a look at, and I think we'll have some pretty informative and eye-opening information whenever we get there. And lastly, we'll talk about a market news sentiment confirmation tool that we have developed as well. But let's talk a little bit about what machine learning is. Machine learning is the task of using statistical methods to find new insight into your data. It has evolved from many different places, pattern recognition, artificial intelligence, but you can really think of machine learning as finding new algorithms to make predictions about your data. Machine learning takes a rule-based algorithm and it learns from the information, and it provides a new insight to your data. So for example here, what we see on the left is a much more complex expanded formula of Einstein's well-known theory of relativity. We're all probably much more familiar with the representation on the right side of the screen, E equals mc squared. Well, what machine learning does is it takes a more complex form of your data and it distills it down into information that's easier to see, easier to recognize, and easier to act upon. One of the things that we often find is that we'll look at traders' trading setup and we'll look at their desk and their plotting and charting systems, and it's just packed filled with indicators and analysis. You have like 6 screens and there's a different indicator package on every screen, and in the end, it's no wonder that sometimes we don't really know whether we can simply make a trade or not, because what we're trying to teach our human mind to do is to digest all of that information and help us make a simple yes or no decision. Well, that's what some of the tools we're going to talk about today are designed to help us do. To take all of that information and not add more, but to actually distill it down to fewer things that we have to think about and consider, and go about the process of making trading more insightful. As we said, machine learning is part pattern recognition, part artificial intelligence, and part a good dose of just basic statistics. And so we're going to take all of these things, and we're not going to teach you pattern recognition, artificial intelligence, or statistics. That's what we do in the background. What we're going to do is we're going to apply those tools to trading and to trading decisions and help make it a little bit easier. One of the first things that we're going to take a look at is a tool that removes the noise from price movement. What we're going to see is that when you take a look at typical information, there's a tremendous amount of information on a candlestick chart, your basic candlestick chart. Let's take a look at that now. What we have here is our traders portal that has essentially organized the tools that we're going to talk about today in a simple left to right kind of format. This is a chart of about the last year of price information from the SPY, from the large ETF that mirrors the S&P 500. What you can see is if you look at the red line, it's a lot easier to interpret tops, double tops, support and resistance. We see that when we look over here in mid to late 2014, we had resistance at about 190. We double check that resistance again here end of October, and then it jumps up above 205 where it tested that level a couple of times. It's a lot easier to see what price is doing there. If we jump over and take a look at the candlestick or at the chart for the same period without that area or without the filtering, what we see is that there's a lot of information. There's up days and down days, and even though price is going down, we have a lot of green bars in the middle. And even when price is going up, there are some red bars that occur in the middle of this. Sometimes it appears to go simply sideways for a period. And so in this picture, we have an opening price, a closing price, a high and a low, and a color. So we have 5 pieces of information your brain has to see, interpret, and make sense out of. In addition, we have days like this day here on December 18th, that has just a huge range of information. Compare that to the situation where we filtered all of that out. It looks like the market is a lot more calm and steady when we filter out the noise of the information. And in fact, let's just take a look here at a couple of dates, and we'll see that as we go along, boy, it's from July, early part of July in 2013, it's a lot easier to see and interpret what the market is doing without having to interpret all of the additional 5 pieces of information that we see in a typical candlestick chart like this. By the way, this is not just the a line drawing of the closing chart, but what we've done is we've estimated the noise in the closing prices of the SPY, and we've simply removed a lot of the market noise. It's a variable setting, and this setting seems to be pretty good at removing most of the noise without removing a lot of the small nuances and little bumps along the way. It's still much easier to interpret. And so one of the things that we found is that when you simply make price easier to see and look at, and when you remove a lot of the noise from the market, a lot of times it becomes much clearer about what to do. Let's just take another one right quick. Let's say Apple. We can draw in Apple, and boy, isn't that a lot easier to see and interpret than the typical up and down movements that we see with candlesticks. It's easier to see and interpret essentially what price is doing along the way. Let's take a look right quick at ExxonMobil. Even given the price of oil, it's easy to see what this particular stock is doing along the way. Take a look at Microsoft. We can see the back and forth, and if you look here, once we got up to about $49 a share, we hit a little bit of resistance. It looks like we might actually be doing that along the way as well. Whoops. One of the helpful things that we have on our input is that you don't even have to click enter. You just type in the name, and it starts looking as soon as you're typing. So this is our noise reduction feature. It removes a lot of the back and forth movement of prices. It filters out a lot of the market noise, and it shows you just the essence of what price is doing. So especially if you trade price action, this is a great tool to help you see clearer and easier what the market is really doing. So now that we've removed the noise from the market, let's talk about our next tool, and that is a predictive model that makes it easy to see what the market is doing tomorrow. Now, a lot of technical indicators do similar things. They attempt to tell you what market it is about to do. For example, divergence. But unfortunately, there's not just one kind of divergence. There are many different kinds, and you have to start comparing many different kinds of indicators. And then there's the question of, well, which divergence between which pair of indicators or price plus indicator are you going to look at, and then what is the look back period of the indicator. So it's not as straightforward as it could be. There are a lot of ways that we can do this, but what we have developed is a very powerful yet easy to understand model of price prediction. We use a series of very sophisticated machine learning models where we learn each and every stock that is listed on the exchanges, and we can show you how likely it is for price to increase or decrease tomorrow. And it simply answers the question, which direction will the market go? Sometimes it will go up, sometimes it will go down. Let's take a look and see what it looks like. You'll notice that after the price chart tab, the next one to the right is tomorrow's prediction. So we had the SPY pulled up. What it's doing now, it went blank. It went away to gather all of the information, analyze several years worth of individual days data, and it comes back with the prediction. What we find is that it looks like tomorrow's market has about a 56% chance of going down. You see, it only gives you two choices. -1 means the market will go down. +1 represents the likelihood of the market going up. You simply find the number that's bigger. 0.56 is pretty close to the middle. In other words, the market might not move a lot, or it might be uncertain as to which direction it may go. What about, we looked at Apple earlier. Let's see what Apple is likely to do tomorrow. That's a little bit clearer. It has a 60% chance of going up tomorrow, given where it is for today. We also looked at ExxonMobil. Let's just pull that up, see what that's doing. Again, it's kind of in the middle, 0.52. So if you were wondering about whether to enter those trades, it's uncertain. I would say that unless it's greater than 0.6, it's a great deal of uncertainty about which direction that particular stock is likely to go. Let's take a look at Microsoft. Well, that's a little bit clearer. It has a 68% chance of going down tomorrow. So if you were considering buying options or taking a long position, you might want to think about that. Delay your decision for a day, see what it's going to do, because at least the way that it's behaving now, it has a 68% chance of decreasing tomorrow compared to today. We can also take a look at ETFs. As long as it's basically a ticker that is traded on the exchanges, we can pull up that information and it will calculate it directly for you and let you know. Well, this one's a little bit different. It's also showing that still a little bit of uncertainty, but probably it has a slight chance or greater likelihood of going down. Let me see here. I think this is one of the other ETFs that we've looked at. As it pulls the price up, well, you got about a 0.6 chance or a 60% chance of the GLD ETF increasing tomorrow. And so what we find is that we can see very clearly what the likelihood or the probability of that ETF going up or going down. Well, we said it was likely to go up. Does that make sense with the noise-reduced price movement? Well, it's kind of gone down, and it looks like it's gone back up here. So it's kind of on an upswing. So yeah, those things make sense. It's very likely to have an upswing tomorrow, and so you want to take a long position in that particular ETF. Seems like a pretty good idea. But what that gives you is a level of confidence of looking at, compared to what it's done in the past, how likely is it to increase in price tomorrow. And it evaluates an enormous number of indicators, additional technical calculations that aren't shown on an indicator, and it puts all of that information into a single analysis, and it wraps it up into a single probability. What's the likelihood that it will go up, and what's the likelihood that it will decrease tomorrow? The next thing that we want to look at, and this is one of the more exciting things, and as it turns out, something that I've used more and more and more in my own personal trading, because it's turned out to be just so valuable. One of the things that we look at is, well, I've talked to a lot of traders, and many of them will say, well, I like to trade oil, or I day trade options on Apple or Facebook, and this is what I like to use. And I use a strategy that uses a particular technical indicator. In other words, oh, well, I trade a MACD, or I trade an RSI, or I trade a particular indicator, and I want to know how well it does on a particular stock, or ETF, or futures contract. Well, what they often then do is they'll try it out for a while. If you're that trader, in the back of your mind, you're wondering, even though I may have seen good results in the trial period, how do I know that this good result, this profitable trading episode, is going to continue in the future? How do I know that I just didn't happen to get lucky and it's actually not a very helpful trading strategy, but that's just the way that the market rolls? There is absolutely a definitive way to know whether or not the indicators you're using are appropriate and the best indicators to use for trading a particular stock, ETF, and obviously the options on all of that. The question that indicator analysis answers is which indicators are the most powerful for telling me the direction up or down that the price of a stock or ETF or futures contract will move. Wouldn't you like to know, if you want to, let's say, day trade Facebook or Apple options, that the trading strategy you're using was using the most powerful technical indicators that correspond to changes in the price? What we're going to do is show you a way that you can absolutely know before you ever trade a single dollar. And if you are a trader who trades price action or price in volume, this is especially true for you, because what we'll find and what we'll see is that volume is not equally as powerful as a predictive indicator for every stock. Some of them it is. For some stocks, however, volume isn't even in the top 10. Let's take a look. So we were looking at gold last time. Let's just take a look right quick at the most important indicators for gold. And so it's going away, pulling the data. My goodness, look at that. If you are a price action trader, the volume isn't even in the top 10. Look here. It's way down here. Although it is 0.86, it's a little bit different. These on this is a beta version. In the production version that we have, we actually sort them for you so that you can see exactly which indicators are most important. Let's pull up an example that matches the one that's in the book chapter. For MMM 3M, what we find is that, it's going to pull it up here, the open right down here is important, as is volume. But what are some of the other indicators that are important or not important? Take a look at this one, the ATR. It has an importance value of 55, which means that it's way down the list. So if you're trading 3M and you are using let's say an ATR trailing stop to exit your trades, you could have been wondering why you give back so much profit. with this particular stock using a trailing ATR as one of the indicators. The price high point is very, very important. But look at this. Unbalanced volume is not a very helpful indicator. That 64 is a lot less than volume, open, even lower than a 9-period EMA. The closing price is very, very important, as is the directional indicator, the DX, and the ADX as well. Let's take a look at that Facebook example. A lot of people day trade Facebook options. We wanted to take a look and just show you the relative importance of some of the most powerful indicators if you do happen to trade Facebook. So we see volume here at 83. One of the more important indicators for Facebook. But let's take a look at some indicators that are commonly used that are actually much less important. Money flow indicator, it's way down there. On balance volume, yep, it's down there too. SMI, gosh, you do a better job just using the ADX. Or how about this one? The CCI is even more important if you're trading Facebook. So if you were going to use a combination of price, volume, and the CCI for trading Facebook, that would be a pretty good trading strategy, because it's a lot more important than things like the true range or the SMI. Certainly a lot more important than unbalanced volume. And so for the most important indicators, it tells us before you've ever traded a single dollar which indicators are most important for registering or telling you what price is going to do with this particular stock or ETF. And so if you have a particular indicator that you like to trade, you can find out what is going to be likely a good fit for that indicator. Conversely, if you have a particular symbol that you want to trade, a lot of times you can simply, well, not a lot of times, but you can go in, put in the name of the stock, and it will tell you exactly which indicators are most powerful in determining the price movement for that particular indicator. So Tesla, you know what is actually pretty good? We have the CCI there, but we also have a 9-period exponential moving average. That's a pretty good group right there. And on this one, for Tesla, the SMI is much more powerful than this right here. You know what signal is? Signal is the signal line of the MACD. So if you're using a MACD to trade Tesla, be careful, because there are more powerful indicators that will do a better job of telling you what price is doing. On the converse, if you're married to that MACD indicator, pick something else. Pick something else that is actually more reactive with the indicators that you feel comfortable with. And so what these tools do is provide a host of information that you can use in a lot of different ways. Let's see. On the Qs, the signal is the MACD signal line is still less important than the SMI. It's less important than on balance volume. And so even the CCI is a lot more important. But be careful, because the ADX isn't necessarily as helpful for trading this particular stock. So hopefully that gives you a good feeling for what are the most important indicators for trading the information, for trading the stocks or ETFs or even futures contracts that are important to you. It's useful for, let's say you have an RSI based trading strategy. What are the most important stocks that should be on your watch list? Well, rather than having to go through and do paper trading trials with every single stock, or putting together a portfolio and then trying to backtest the entire portfolio, wouldn't it be helpful to know which instruments, which companies are most closely or most powerfully predicted by the indicators that you want to trade. So using that information, you can either change indicators to fit the instrument, or you can change instruments to fit the indicators. But either way, it allows you to know beforehand whether what you are doing to try to be a successful trader is going to be important, because it tells you in a very direct comparison what is more and less important or powerful as an indicator for trading that particular stock. Let's take a look at the fourth tool that we have here. And this one's very, very simple. The last tool we'll present is the News Sentiment Analysis tool. In this case, we scour the web for news stories about each of our major markets. Now this one is a little different because it is related not to individual stocks, but to the markets in which they're a part of. One of the things that we found is that sometimes, there's not a lot of social media going on out there about Caterpillar. Not a lot of people get excited about big yellow tractors driving down the road, building buildings or building roads. There's probably not a lot of news stories. Well, I know there's not, compared to other places like Apple or Facebook, especially around new product launches. But what we also find is that many times these less dynamic companies, we'll call them, things that aren't in the news quite as much, like Cardinal Healthcare. A lot of people trade that, but you don't find a lot of social media sentiment for a lot of the companies in the S&P 500. But what you do find, I found, is that these companies are pushed around by the basic market sentiment in which they're participating. So what we do is we go out and we scour the web for news stories about each of the major markets. And then we compile all of the major news sentiment that's known, and we show it in a range of +5 to -5. And this is, you can kind of think of the news media sentiment is kind of the feeling about the market, is all of the information that's being reported on a particular market segment good news or bad news. And to make it easier, it's presented in a way that is exactly what you would expect. Negative numbers represent negative feelings or negative sentiment. Positive numbers are positive sentiment, positive feelings. The more positive the number, the more positive the sentiment. Simple, right? So even though your particular stock or ETF may have a certain prediction. Let's say it has a prediction of 0.54 that it's likely to go up. But the market sentiment is decidedly negative. Well, what we want to do is, it's never a good idea to trade against the overall larger market, especially if the overall market sentiment is very extreme, extremely good or extremely bad. This is because regardless of how well or poor an individual company is doing, their price is often pushed around quite a bit by the larger market. And so we need to pay attention to market news sentiment. To make this easier, we've calculated it and we've put it into a display that is easy to see, understand, and interpret. On the sentiment gauges that we have here, we've simply plotted the market sentiment for the S&P 500, for the NASDAQ, and for the Russell. And we've marked them there with the individual futures contract abbreviations, ES for the S&P, NQ for the NASDAQ, and TF for the Russell. And what we do is we put it on a gauge. You can look at it, and it's kind of like your car speedometer, right? You know when the needle is beyond the 55 miles per hour limit, you know things are going pretty well for you. You're making time. If it's below that, you're in traffic and you're going slow. We also plot the number down here. So the gauge here points to 1.5. We plot exactly what it is right here. We see it goes from a maximum positive score of +5 to a maximum negative score of -5. And so it's broken up like this. Here the TF we see is 0.2. So what you can do is, especially if you're trading one of the tech stocks or something that's listed on the NASDAQ, just peek over here at the NASDAQ sentiment. If your probability for an increase tomorrow is 0.6 or 0.62, the NASDAQ sentiment is positive. It's not close to the zero line like the ES is here in this example. It's another piece of information that says your stock price is likely to go up tomorrow. So you want to buy some short-term options. That would be a situation where all of the information agrees with what you want to do. If you're thinking about buying some put options, you might want to wait. If you're talking about something that's on the NASDAQ, if you're looking at the S&P, it's kind of zero here, which means that the market's not feeling overly good or overly bad. And so if your prediction and other indicators suggest that the price of your particular stock or ETF may be going down, it's an okay trade to make. You can go back and just take a look at the price chart, see what it's doing. Remember, we've removed the noise for you. And so that should be an easier trade to consider. Okay. So one of the things that we're going to do for everybody that has stuck around for the presentation, the webinar this afternoon, the tools that we used and previewed are a set of machine learning tools that we've put together for traders. We've put together in a website. And for the next 2 weeks, we're going to give a free trial offer. What I would like is to hear your feedback on what you think about it, whether you think it's helpful, whether it's working out, ways that it worked well for you, as well as ways that you wish it had done something different for you. If you will send me an email, you see the email there at the bottom of the page, Dwayne@autotradesignal.com. I'll be sure to send you the unlocked web address that we'll have available for the next couple of weeks for you to try out. There's no limit to the number of stocks or requests that you can make. We've set aside a certain amount of computing resources that hopefully will be sufficient. If we get just a tremendous amount of traffic, we may have to spin up another server to handle it. But go ahead and send me an email if you think this is a trial that something that could potentially help you and be helpful. We're going to be offering that for all of our autotradesignal.com monthly subscribers, and for the next 2 weeks for people that were with us in the webinar. If you have any more questions, feel free to give me a call or send me an email. We'll be around on Skype if you want to send a direct message. Certainly email, we're always available. You can reach me directly at Dwayne@autotradesignal.com, and I always do my best to answer the email questions that we have personally. And so want to thank you for your time this afternoon, and if we can do anything to help your trading more profitable, we're always interested in that. Thanks again, and we'll see you soon.